Hello and welcome to another episode of my channel. And today's the topic of discussion is nothing but why should you invest in stock markets? Obviously, that's a valid question because 101 avenues to invest are available. Then why should you invest in stock markets? The first reason why you should invest in stock market is the fear of inflation. We know that inflation. What is inflation, right? All the fortnightly we goes through the inflation numbers. Okay. So basically, what is inflation? What we can do with inflation, or how the inflation affects us. In simple terms, you can say that inflation is nothing but the value of money depreciation that's in your hand. You need not about the rest of the money. You are always bothered about the money that's in your hand, right? Okay, so I will just demonstrate how the power of money in your hand makes you different. For example, if you are a person who is trying to invest your money in fixed deposit, what happens? Normally, as per the usual course in the current investment or interest situation, it will take almost 8 years to double your money. That means if you invest in 2021, 1 lakh rupees in an FD, fixed deposit, in 2029, it will be doubled. It will give you 2 lakh rupees. Now with 1 lakh rupees, what all things you can do? With 1 lakh rupees, you could have able to pay your kid's school fee now, yearly school fee. That may be something like in a tier 2 city. That may be 1 lakh. That may be sufficiently enough. Including school fee doesn't mean that just school fee. School fee plus the allied stationery, etc., etc. Okay, anyway, take that for granted. So with that, you can able to pay 1 year school fee, annual school fee for your kid that may meet your demand. But after 8 years, in 2021, when you get 2 lakh, you should understand one thing, that as per the current growth, at least you have to pay 5 lakh rupees per annum as annual school fee for a school kid. Then what had happened? You can clearly say that your money or your purchasing power has been depreciated to 1 by 2.5. Obviously, your purchasing power has been depreciated to 40%. Okay. From 100% of the purchasing power, it has been depreciated to 40%. This is what happening, or this is the inference, or this is what inflation do with our savings. Okay, so this is the one reason why people invest in stock market. When it comes to stock market, what happens? Inflation cannot overtake a stronger company's profit, because profit always overtakes the inflation of any company. That's the reason why stronger companies remains as stronger company, or they post stronger set of numbers annually. So the corporate results for stronger companies or serious bigger companies that always exceeds or that outperform the inflation of any particular country. So the results will be better, the returns will be better for investors. Obviously, that obviously gives an upper hand for the investors over the inflation effects. Second one is lowering in interest rates. When a country develops, the interest rate decreases. Mainly because of the fact that this interest rate reduction drives more business, because you will get loans at a lower rate. That drives the economy of any country. That's what happening in India also. Lowering in interest, higher in corporate action, higher in corporate profits. So this is the one another thing that drives the people towards stock markets. So the people who invest in fixed deposit or relies on the interest of any investment that's in banks, they can't actually live with that unless and until they find some other means for income. That's the secondary reason. Second reason, that's what? The third reason is nothing but the higher probability of getting a decent income by compounding from stock market. For example, assume that if you invest in Reliance Industries in 70s or 80s, okay, or in any other countries, for any other companies like Infosys or ABB or Reliance Industries or Bombay Dye in 80s, usually after 40 years, what had happened? At least you would have been grown to 100 times. Obviously, that outgrown the economy also. That had happened. So, what is meant by compounding? Compounding means, for example, if you have invested 100 rupee now, if that company has grown 10%, just for simplicity, you just imagine that 10% company grown, 10% growth in the share price of the company also done. In that case, the share price of that particular company has been increased to 110. Next year, if the company has been grown to another 10%, then it's not becoming 120. It has become 121 because the previous value was 110. So 10% growth means 110 rupees 10%, that is 11. So 110 plus 11, 121. So this is what compounding, and that has been compounded towards the future. This is the attraction of stock market. Stronger companies always give compounded results, and that will give you some returns that's beyond your imagination. And another thing is about usually we consider it as when better results come, the liquidity is less. In the case of bonds, locked bonds or mutual funds, it's like that. Liquidity is almost remote. But on the other hand, when it comes to stock market, the liquidity is there. Because if you just sell some share today, tomorrow your account will be funded. If you give a payout request before 10 a.m., same day the payout will be done. Else next day payout will be there. So within 2 days, you can convert your shares into money. So liquidity is much higher. This is one another attraction of stock markets. And the final one is the lackluster performance of real estate. And the real estate or the commodities that give some lesser performance in terms of returns, obviously people will drive towards this stock markets. And as I have mentioned in some other video, obviously the only exposure of stock market towards Indian population is less than 2%. A lot many people are yet to come to this scenario. If at least 1% of the Indian population comes to the market, the number is more than 1.5 crores. That's nearly 1.5 crores. So just imagine 1.5 crore people are comes to the market, and one person invests 1,000 rupees. Then what will be there? That will be a 11-digit number. It's very clear. So these are the main reason why you should invest in stock markets. So thanks for watching. See you in the next episode. Till then, bye from Anup.
Please subscribe and click on the bell icon for more videos.